Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical structure level for this market. In fact, this zone was acting as previous resistance here, preceding all these rejections to the downside. Then the market broke above that zone, and all that previous resistance after the market broke it to the upside with this impulse was turned support here, because what we know is that in the market, a previous level of resistance, especially if it has been tested multiple times and always acted as resistance, once it gets broken to the upside, becomes support. And the market, in fact, tested this level here and respected it as previous resistance turned support. And the market rejected the level to the upside quite aggressively. Now, at the moment, we still are in this rejection phase away from the level. However, as usual, when you have an uptrend, you expect the market to create a series of higher highs and higher lows. So essentially a series of impulses and corrections in which every time the market is creating higher highs and at the same time it is also creating higher lows. Now, if we look at this specific price action, we can see how the last move, if we look from here, was first the impulse with the creation of a new higher high, then a higher low, then a new higher high. So the next logical step would be to see a correction and the creation of a new higher low. So a low which is higher than the previous one that we have here. So in a situation like this, from a monthly standpoint, we could expect some short-term bearish price action and then longer-term bullish continuation. And if we look closely, we can see how already the market has started getting rejected to the downside, as we can see that the market has in fact created this massive wick. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, it is a quite similar situation. We can notice once again an impulse, correction, another impulse to the upside, and now the start of yet another correction to the downside. Now, when we have an impulse and a correction, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.3 to 50% and 0.618 Fibonacci retracements, which at the moment are lining up exactly at this zone. And this area is a strong support level from which we could expect the market to create the continuation to the upside, essentially completing this weekly impulse correction and impulse pattern to the upside, and also the monthly pattern. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, the situation starts getting quite interesting. And by the way, I also spoke about gold quite a few times in the past. I spoke about it, in fact, when the market was around here. I explained all the reasons for which we could expect this push higher. Then after the break of structure and retest when the market was at this level, I explained all the reasons for which we could expect this push higher. Again, after this impulse and correction, I explained all the reasons for which from here we could expect the impulse, correction to the structure and continuation to the upside, which again is exactly what the market did. And the last analysis explained all the reasons for which we could expect this impulse, correction, and the creation of a new higher high, which again is exactly what the market did. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. But at the moment, what do we have and where we could be looking for the next potential move here from a daily perspective when it comes to the structure of gold? Now, before we get in more details into that, first, let's go and see what we have when it comes to the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing. Now, if we check data precisely for gold, we can see how with the last reports, net positions have now started getting slightly decreased. In fact, we went from having a 207.2k net positions down to 202.4k net positions. Now we're sitting at 201.9k net positions. So slowly, institutions are starting to shift again to the bearish side for gold, increasing their shorts from 66k to 76k. And if we look at the longs here, more or less they're remaining the same, but in the very short term, they are getting decreased, going from 281k down to 278k. So institutions are currently increasing their shorts and decreasing their longs on gold. Now, that comes with no surprise that since institutions are shorting, the market is pushing, in fact, lower. Now, if we keep that in mind, that institutions in the short term are pushing to the bearish side, and we move back to the chart, what we can notice. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find here linked on the screen and also in description, so you never miss new updates. Now, back to the analysis. As I was saying, from a daily perspective, what do we have? Well, here on the daily, what we must notice is that the market has just created this M pattern. And in general, after the creation of an M pattern, what we could expect is first a push higher for the completion of the pattern at the neckline, and then the continuation to the downside. So here in the daily time frame, what usually follows when we see a pattern like this is first a correction to the neckline, and then a potential continuation to the downside. So essentially the creation of an impulse correction, an impulse pattern to the downside that tests also the neckline of the M pattern itself. So is it possible that the market will create this short-term move higher and then the continuation to the downside? Well, in the short term, gold is bearish. As we have seen, institutions are increasing their shorts and decreasing the longs. However, in the long run, it is incredibly bullish, with 278k longs compared to only 76.8k shorts. So in a bullish market, even though it is correcting to the downside, anyway, we could see some pushes to the upside during the bearish correction. So that is definitely a possibility that the first move would be a potential push higher, completing this M pattern. It is definitely a possibility. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this M pattern at the neckline. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel. And I will see you in it.
If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.